Welcome traders to Admiral Markets. We're going to take a look at the Forex market, specifically at the end of the quarter number 1, 2014, but also, of course, what could happen in the new month of April regarding the euro dollar, pound dollar, dollar yen, AUDUSD, and of course also the webinar lineup of that month. First of all, though, the disclaimer explaining that this material is made for a global audience. Please take that into account. This may not be suitable for everyone. To get the corresponding info on charting, conditions, and other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and by continuing watching this webinar, you agree with the disclaimer and its content. We thank you for your attention. Alright, this week we have a great lineup. We got, of course, today the weekly FX recap with Tarantula, and then Tuesday, Wednesday, Thursday, we have live trading labs, moving average trading, trendline trading, and Camarilla intraday trading. So it's a great lineup, I think. We got expert advice, we got Murray Math Part 2, and then, of course, our Pro Learning Lab, Basic Forex Strategies, Part 2. So, hope to see you at one or all of these webinars soon. Of course, let's start with the euro dollar. Euro dollar definitely in some downside momentum here the last couple of 2 weeks. But we did have a pause and a bounce off the 50 fib. We see a bullish candle, a daily bullish candle on Friday, and a clear wick respecting that 50% fib. So if we were to, for instance, break Friday's high of about 137.72, there could be some intraday and maybe some swing trade positions potentially possible about to 138.70, where we have a trend line coming in as a resistance as well. So one break of one resistance line could see basically the continuation and bounce up to that next resistance line. Now, if that 50 fib is a major turning spot, there could be even more momentum to the upside to the targets like 141 and 142.60, which is the minus 272 and the minus 618 target. Now, obviously, if we do not break Friday's high and not break this trend line here, we could see maybe a potential even to retrace deeper, such as that 61.8 fib at around 136.65. For the moment, though, it looks like a bullish bounce, just waiting to see if we can get the confirmation and continuation here on the euro dollar daily. From the hourly perspective, that looks like this. You can see prices approaching this trend line, just has that daily high still in the way, otherwise looking like a potential push through this trend line on the hourly chart. This is the pound dollar on the hourly chart, and we can see the potential for the pound dollar here for upside because we broke out of this resistance line. Let me make it a bit different color. The orange resistance line here broken. That was a downtrend channel that was broken here, and the pound dollar now making higher highs and higher lows after it bounced off at 61.8. I'll just show you in a second. For the moment, though, this is looking like a potential actually retracement now that is potentially possible down to, for instance, 38.2 and the 50 fib or the 61.8. A hook back, for instance, to the broken trend line here is an option, or any of these fibs, for more upside. Now, one of the reasons that this could happen is, first of all, we did complete 5 waves most likely, but also there's divergence very clearly between these tops. Now, if we do break the next top, which is still possible, price was trying to poke through it, we would have double divergence, and I would say a retracement is likely at least down to the 38.2 fib, 50 or 61.8, somewhere one of those three seems the most likely at the moment. We are right at the support level here too, so we have to see if that is used as support or if price breaks through indeed to give that bigger retracement. Now, which fib was used for that bigger bounce that I just showed you? The 61.8, in fact, the big up move, the 6-week consolidation down to the 61.8, and now we're seeing the bounce off that 61.8 fib. The target of that is actually 169.70, close to 170, and after that, if we break that level, there's a potential to go up to higher grounds, maybe even 180. AUDUSD is quite straightforward. We had a downtrend, now went up to the 38.2 fib and approaching the 61.8. However, we haven't reached there yet, so that target is still alive and still potential for the price to get there. We're now actually making a retracement, so anywhere a bounce off one of these fibs up to that fib and target seems the most likely path of least resistance for the AUDUSD. Then we have the dollar yen, still stuck in this consolidation, still stuck in this triangle, contracting triangle to be precise. Price is reaching the top. Let's see, there is some momentum here, so maybe it could push through it. If not, we could see maybe a fall again to the bottom. This is a bounce or break spot. Obviously, a break above the triangle could see extensions to higher ground, like for instance this monthly trend line, and above the monthly trend line to the targets, the fib targets to be precise, at 107.75 and 110.80. Well, traders, that wraps up today's video. Thank you so much for joining us. Looking so much forward to see you in all or one of these webinars, and wish you all a great week and great trading. Cheers.